Quickly, what we are going to do today is take a look at the Nifty, analyze Nifty from the end of the week point of view. We will take a look at the sectoral viewpoint as well, a sectoral analysis. We will combine sectoral analysis with the help of the RRG graphs. I will scan the Nifty 200 universe for investment opportunities from a weekly point of view, and then we will take a look at your doubts or questions or trades that you have in your current trading portfolio. So with that in mind, I was looking at the US markets, how they closed last evening. And because this is an end of week analysis, it makes sense to not look at the intraday charts. So this is my usual 3 time frames, which is weekly, daily, 75. I'm going to change it to monthly. The middle one, I'll change it to weekly. And the rightmost one, I'll change it to daily. So monthly, weekly, and daily point of view, we're going to have a slightly larger point of view perspective. So with this, let's, as I was saying, I was taking a look at the US markets, how they closed. So the short-term momentum is definitely slowing down in the US markets. That's completely okay and all right because of the bounce back that it had. Now, the monthly charts are looking okayish, in fact, better. You can call this some kind of a flaggish pattern, which probably can give you that flag breakout on the upside. The trend from the weekly point of view is fine. It's dealing with these, it's knocking close to those resistances. So high chance that after this one-way sharp high momentum bounce back, the market will slow down a little bit. By slow down, I expect range-bound activity, probably within this range. Slowdown can lead to corrections. A healthy correction, even 30-40% of the previous move is okay. 30-40% of the previous move, not by percentage numbers. That is halfway will be somewhere here, this halfway. Till even 50% correction, I think is fine, it's healthy. But if it slips below that 33K mark for the Dow Jones Industrial, then I think it's not a good sign. So keeping that in mind, the global market seems to be somewhat supportive. Now let's come to sectoral indices. And in this sectoral indices list, I have the benchmark indices on the top over here, and then the other few sectoral ones. First, Nifty. So Nifty, from the weekly point of view, has created an engulfing that stands out very clear. We had a 3-week bounce back, and last week was all the 5 days actually took the index down. And towards the last 2 days, that is Friday and Thursday, you'll notice some distinct shadows shaping up, which was missing on the first 3 days. The first 3 days was shadows were predominantly on the downside. Now, thanks to Infosys, on Monday, it was a gap down from the stock, Infosys, which led to the other IT stocks come off, which led to a pretty sharp sell-off from the Nifty and the CNX IT index. Yesterday afternoon, I had shared a tweet, I had shared a view that it seems like the index had trapped the bears by breaking below this low and then immediately bouncing back. If this was a trap, if this was a real trap, then come next week, Monday, when the market opens, it should scale above these levels. It should be above 17,700 somewhere here. And if you get that, then high chance that it will try and scale further up by at least another 100 points, close to 17,800. So what's the view? From the daily point of view, we are in an uptrend. We are going through a momentum slowdown, which has led to this corrective move. Last 2 days have shown signs of bounce back, probably signs of a bear trap. And we need to see that whether the index takes out Friday's high and stays above that or not. Early next week, by Monday, Tuesday, this should happen. If it doesn't happen, then high chance it will open up on the downside. So the view is cautiously bullish from the daily point of view. The view is cautiously bullish from the weekly point of view also. We should not ignore or discount this engulfing. But for this engulfing to play out, it is important that the low of the engulfing is breached and broken. Until that happens, we will go with the momentum, we will go with the trend. both of them are positive. The long-term picture of the Nifty is not that bad. It probably raises question about the quality of this breakout, which seems like it's a breakout failure. This is not a good sign from the monthly charts. We're talking very long term, all right? Because number one, we did see this breakout. We have seen that the breakout has failed. After breakout failures, when I generally notice breakout has failed, it gives a bounce back, which it is giving right now in the month of April. If the breakout failure, that is this move, intends further downside, maybe towards 16,500 or 15,000 kind of levels, then the chart will form an A, B, C kind of a corrective move. Which means that as of now, as you can notice, this is April, this is March. The monthly lows will be very, very important to keep a watch. So from the point of view of monthly, I would say 50% bullish, 50% bearish. We have to keep our eyes open. The monthly charts are not giving us emphatic, strong one-way bias towards bullishness or bearishness. We are divided, but from the weekly and daily point of view, we are cautiously bullish as long as the weekly lows hold. Because if the weekly lows fail to hold, then probably we will have this engulfing playing out. Okay? And see, that's exactly how we have positioned ourselves for the last week and a half, right? In our live market daily sessions, we've been discussing that we should be cautiously bullish. And few key terms that we were using over and over again was stock selection needs to be very good. It's going to be a stock specific market, irrespective of the sector. And I think that we should maintain the same approach going forward, unless we get a clear-cut directional clarity. Until we get that, I think we will continue to follow this strategy, right? Now, let's quickly take a look at the Bank Nifty. There we are. Now, we are going to focus primarily on this chart, on the weekly time frame, okay? And then we will look at monthly, daily, otherwise. So we have a bounce back, post which it's kind of a slowdown. Last 5 days behave like this. We can see M1 coming off. It's a typical sign of a momentum slowdown. We had a good run up, so this is due. Any kind of a correction from here on, if it comes, then the previous highs, which was essentially close to that 41,500, 41,600, should allow you some kind of a support. Can it open further down? Yes. If the weekly lows are broken, if this week's low is broken from a daily point of view, if Friday's low or weekly low is broken, then yes, you can expect a slightly deeper correction, maybe in this area of 41,200. So keep an as I said, a divided mind between a breakout on either direction. Auto held well. If you follow, if you've been following the end of the day videos which I share about the market, I've been talking about this area very, very closely, talking about stocks like Maruti and Hero Motoco and all that. And the words that I was using was dizzy heights, and it looks a little wobbly and it should come down. So we got this move yesterday. I think Maruti was the main contributor to this move on the downside. The larger picture of auto is nothing great. I think it is purely a range-bound sector now. And the range-bound nature, the oscillations of the moves are fairly healthy, wide swings on both the directions, which gives a trader enough opportunity to trade for 2-3 days and come out. So I think we will continue to look at auto from that point of view. Right now, from a short-term point of view, careful, bearish, any kind of a bounce back can lead to a further leg on the downside. Weekly needs a little bit of slowdown, so I would say cautiously bearish. And it's a contrarian view. It's an uptrend which is coming down. Same thing with finance. It looks like a situation where the CNX Finance, from a weekly point of view, is just given a sign of consolidation, which is over here. Monthly charts are completely stuck in a range. Pretty bullish. Monthly charts are fairly bullish, not a problem there. But again, I feel that any kind of compromise of last week's low, this week that we had behind us, can lead to a little bit of weakness. So whatever sectoral analysis we have done so far, it's angling towards a bit of bearishness. Now let's see if there are any sectoral charts which gives us some bullishness. So first that comes in that line is FMCG. The FMCG had given us a breakout, clear cut over here, gave a throwback, and then it picked up really well. And the dark night over here continues to support the index, support the sector and the index. And I'm talking about ITC, exceptional move coming in from that stock. IT, I would say not ready yet. The daily charts would start to offer you some divergences. Short-term traders might want to participate in the bounce back. I think intraday charts will give you that chance to participate on the bounce back, but I think the bounce back will be short-lived. The bounce back will not be a big one in terms of price or in terms of time. So if you're trying to participate in the IT pack on the long side, make sure that the trade is a very quick one. You don't want to hold on to it for long unless it's some kind of an investment. Now, the problem with the CNX IT index, if you take a look at the monthly chart, is very clear to you. That is, it's dealing with some serious multi-month supports. This is the CNX IT monthly chart. If we take a look at the percentage sell-off, then this leg fall is around 33% correction. After a 33% correction, the index has gone sideways, wherein it has lost all the momentum, right? So long-term picture, not good. If this breakdown happens, then you can expect some further sell-off, unless if it's a trap. So there's not much in IT. I would suggest be a trader in the IT pack from a very short-term point of view, or you can be a long-term investor if you find stocks like TCS or Infosys at attractive levels, then you can keep on accumulating, nibbling there. But from a short-term trading point of view, that is from the daily perspective, at least an improvement of momentum. Until and unless we see an improvement in the underlying momentum, it doesn't make sense. Media does not matter too much. Media also is just buying some time and creating some divergences. It can give you some odd bounce back, maybe Z, maybe PVR, but I'm not much into media stocks. And now comes metals. Now, this will be an interesting one. This will be an interesting one primarily because of its monthly charts. It has given us a breakout failure. This is a breakout failure. This breakout failed. After the breakout failure, this one, it is giving us a 2-month. This is still going on. It's given a couple of months of a bounce back. No improvement in the underlying momentum. This is a sign of serious weakness. I'm talking monthly. And so this is a live chart. This is the month of April. We've got a week to go. So any kind of a slip below the monthly lows and high chance you have another red candle on the downside. So the larger, bigger picture of CNX metal is not good. It's on the weaker side. This can only be proven wrong if the weekly charts improve. The good thing is it has just given us some early signs, momentum-wise and a bit of very short-term trend-wise. I think looking at the weekly and monthly combination, this week that we had behind us, this week's high is important, because if the index manages to take this out, then the momentum would improve further and there'll be further short coverings towards probably 6,200. Tata Steel, Hindalco gave a very good move, and I think Hindalco will slow down, but Tata Steel, one can look at. But as I said, the word is interesting over here, because the monthly charts are weak and beaten down. My interest and the reason why I use the word interesting is, will it open up further down towards these lows, which means another significant correction, which means another significant trending move from the metal pack. Monthly charts are weak. Weekly charts are just improving. Daily charts are in an uptrend going through a momentum slowdown. It will not be easy to trade the metals. It will probably create few traps here and there. So we will we will trade this sector little carefully. But the bias is on the downside. If you get any shorting opportunity from here or here, it makes sense because your larger monthly charts are not good, are weak. Come to pharma, a V-shaped recovery. Few of those stocks gave a pretty good move. And the daily chart has given an exceptionally good move. And after that, it's going up like in the shape of a rising wedge. M1, our short-term momentum is slowing down. Weekly charts is up here. It gave a 1, 2, 3, 4, 5-week move. And these highs more or less corroborate with this congestion. I think it's played its part and it should slow down. It is slowing down and you might get some selling opportunity this week, coming week. Real estate, also a big sharp bounce back and then it's slowing down. The bounce back had extreme momentum behind it and so it will take some time to slow down. I think for any kind of a long trade, we should wait. Any kind of quick short-term short side trade, I think one can take, provided stocks like DLF, Oberoi Real Estate or Godrej Properties offer you any such setup. So as we quickly took a look at the sectoral indices from the monthly, weekly, daily perspective, we understood that most of them had an extended move and most of them are now slowing down. The index slowed down with the help of the Nifty index, slowed down with the help of 5 consecutive negative days last week. Auto has just started to give a move on the downside. So has pharma and real estate. Finance is yet to break down. FMCG is supporting the market. IT is anyways broken down. So all this discussion is leading us towards the same thought that most of the bias is on the downside and that downside bias will see downside movement if weekly lows are broken. If last week's low is broken for any sector or any stock, expect further weakness. That's one. Second is, because it's a stock-specific market, you might see auto coming down, but Larsen and Reliance positive, which will not impact much on the Nifty. By this, I mean it's going to stay a stock-specific index, a stock-specific market on the long side as well as on the short side. But after looking at all these sectors, I would say 60-40. 60 on the downside, 40 on the upside. If we get the break of weekly lows, then the 60% will increase. If we bring our notice, I would like to quickly take a look at the FII, DII kind of activity. This is stockage on the web. And let's say FII, DII behavior from the point of view of, there we are. So what's happened is not much. This is FII sell figures of around 2K, 1K. That's Thursday and Friday. This entire week, last week, went primarily on the sell side, some small numbers, very small numbers here. And they participated during the bounce back well. So FII seems to be participating when the market went up. But if we take a look at the DII behavior, it's kind of more on the mixed side and DII supporting or counterbalancing the FII selling quite well. But the overall market seems to be at a crossroads where it needs to take some directional clue. I'll quickly walk you through the RRG graphs and then we will scan the Nifty 200 for some opportunities from the weekly charts. Sectoral indices, RRG. We will update the benchmark from S&P to CNX 500, updating it. And first, we will take a look at first, let's take a look at 1 week. Last 5 days, the markets had come down. So, PSU Bank, CNX PSU Bank is the only meaningful gainer of 2%, followed by FMCG, primarily ITC. But most of them were down, and IT, of course, the Monday move of Infosys was the biggest killer to this sector. Then there's Nifty. Media, of course, not much. Then metals, which slipped from its intra-week highs. A bit of finance there, HDFC, Bajaj Finance, Finserv kind of stocks. And rest of it, it's nothing much right in the middle. So PSU banks doing good, IT not doing that great, and rest of them just struggling, out of which we know that FMCG is something which is showing the maximum strength. We are on RRG graphs, which shows us relative strength and weakness. So now, let's say increase this week to around 12 weeks, which will give us close to a quarter's analysis. Okay? And now I'm going to sort it in terms of the tail. Sorting it in terms of the tail clearly gives me FMCG, Nifty mid 50 and finance. Mid 50 is more of a broad-based index. Sectoral thematically is essentially FMCG and CNX Fin. FMCG is right up here. It's just cooling off a little bit. That's primarily because of Hindustan Unilever. ITC is taken care of, and Fin is not doing much, right there, trying to catch up some relative strength. So honestly, there's not much in this quadrant. In this leading quadrant, there's not much. FMCG, Fin, okay, but not much names, not much sectors. The good thing is there's quite a few in the improving. The energy pack is improving. That's your ONGC, your Power Grid, NTPC, Reliance. Your real estate improving, and they will probably go through a short-term correction. Pharma is going through a short-term correction, improved recently. Consumer durables, this will be an interesting one. Healthcare, pharma, more or less similar lines, and then you have small cap. Amongst this pack, amongst these sectors, the sectoral indices, which has clearly given a short-term trend reversal and is slowing down, is real estate, pharma, consumer durables. So if we find the index after cooling off, picking up fresh momentum, then we can look to buy on a dip from these sectors. So let's say DLF or Sun Pharma or Tata Consumer Durables or Dabur or anything, you find these stocks coming off, giving a short-term correction. It's holding the support and trying to bounce back. These are the improving quadrant, which can angle towards leading, can. And then there are the weakening, which were doing pretty good before and are now weakening. There's your PSU bank, which has come off significantly. Last week it was the gainer, but it's in the weakening quadrant, maybe a downtrending sector bouncing back. IT, of course. Now, if you follow RRG graphs, you should understand that where was IT a month and a half back and where it is now. That's exactly the nature how RRG graphs move. At this juncture, it was one of the best leading sectors. A vertical drop means loss of momentum. This is where you look for weakness. Okay? And that's exactly how IT has played out. Auto is also there. And I personally, looking at the CNX auto chart, it doesn't give me that, that confidence. Bank Nifty itself, and private banks. Now, this is make or break. Bank Nifty is there, which is predominantly private bank heavy. Auto is there, IT is anyways weak, and then you have PSU bank. So the biggest sector in weightage wise lies here, which is weakening. According to RRG graphs, a weakening quadrant sector should ideally move to lagging, then pick up to improving, then go to leading. It should move in this clockwise manner. It moves in this clockwise manner, but not always smoothly like this, not always like this. It can come to leading to weakening, then I can again go to leading, then again come to weakening, can again do all this. But overall behavior will be like this in a clockwise manner. So having said this, we have the biggest sectors, the biggest names, which are in the weakening quadrant. They can give a short-term bounce back, but overall it's not looking that great. I think this corroborates with our chart analysis that we just did. Metals, as I said, is just given a bounce back. The long-term picture is not good. It's in the lagging quadrant. And if this bounce back doesn't hold, if this improvement of relative strength doesn't hold, then you'll find the RRG graph coming down further for the metal index. And then you have oil and gas. So that's the RRG graphs, which more or less aligns itself with the way we looked at the charts. Now, what I'll do is I'll quickly open up my Iris Plus platform, wherein I have created some weekly high momentum. Now, this is really high momentum scanning that we would like to do. And we'll take a look at the results from that perspective. Let me run it. And I have some names from the long. Now, this is primarily long trades because we're looking for cash market ideas. Let me quickly walk you through some names. Chola Finance. Weekly charts has given us a nice move. It was a breakout and it's a 2-day halt. The Heikin-Ashi charts are behaving well. No compromise on the momentum indicators. So that's one candidate. Motherson Sumi. Turnaround candidate. The momentum has started to shift. It had gone through a significant corrective move. M1 divergences helped to stabilize. Now has given a weekly cool off for 2 bars. Heikin-Ashi in your support. ADR readings are really, really impressive. This can be a good candidate. Motherson Sumi is something that I would like to add to the list and keep an observation. DMart. DMart also looks interesting. Again, a trend reversal candidate wherein we've got a 3-week bounce back and a 2-week consolidation. Momentum indicators have not compromised in themselves yet. And so we can expect some kind of a bounce back further. I reiterate, all these discussions in terms of the stocks that we're having are primarily from the weekly time frame and long only, not from the shorting point of view. And the fourth one that I would like to see, which has come on my screen, is that of Trident. Now, it did trend beautifully up in the past and beautifully down also in the recent past. But is it over or not? I will not jump into it right now. It probably will be a little hasty. Of all these 4 names, Chola Finance, Motherson Sumi, DMart, and Trident that we just looked at right now, I would say Motherson Sumi and DMart are worth keeping on your radar from a long trade point of view next week. Trident, I'll wait. And Chola Fin looks a little bit extended. Probably I'll be a little hasty, but I'll quickly take a look at DMart. Again, there you go. It's one stock which is holding well after the recent bounce back. This is a turnaround story, and Motherson Sumi also is a turnaround story. Both of them looks better. Between these two, if you ask me, I like Motherson Sumi more than DMart, right? There are some other names which I'll discuss with you in this session. But before I go there, I'll quickly take a look at your questions, any doubts that if you have, and then we'll come back to the list of stocks which has come in my scan result.